Welcome back, everybody. Today we are discussing Roth versus traditional. So Roth IRA versus traditional IRA, Roth 401k versus traditional 401k. What are the differences? Let's talk about it, and here we go. First things first, let's really quickly touch on what is a retirement account. A retirement account is a financial tool designed to help individuals save and invest money specifically for their retirement years. These accounts often come with special tax advantages to encourage long-term saving. So basically, you put money in there, you get tax advantages as long as you don't touch it before 59 and a half. If you do, you will get penalized on top of any taxes you owe at that time. But if you can leave it in there past that date, no penalties and lots of tax advantages. Now, the next question you're going to want to ask yourself is this tied to my place of work? If the answer is yes, it's what's called an employer-sponsored account. So that could be something like a 401k, a 403b, a 457. That is something that you would be provided to you by your place of work. You can actively contribute while you're there. Once you leave, you're going to lose active access to it. But if the answer is no, it is not tied to my place of work, it is likely an individual retirement account, or IRA. This is an account that's set up in your Social Security number. It is not tied to a place of work, so you don't have to be working anywhere in particular to have one, and you do not have to stay at that place of work to continue contributing to it. Now, you may be sitting there and asking yourself, can I have both of these? And the answer is absolutely you can. And honestly, you probably should have both. Contribution limits are completely separate, and it is probably in your advantage to have some sort of balance between the two. But that's not what we are here to talk about today, and we will cover the details between those in a future video anyway. What we're here to talk about today is traditional versus Roth. What is the difference between those two? But before we jump into that, I want to do a really quick vocab check because I'm going to be saying contributions and contributing and distributions and distributing. When I'm talking contributions, what I mean is money you put in. When I say distributions, I'm saying money you take out. Contributions, in. Distributions, out. Got it? Let's do it. Now, first things first, let's discuss traditional IRA, traditional 403b, traditional 401k contribution. So money going into a traditional type of account. How is that treated? So money going into a traditional type of account, barring a few exclusions, probably is going to be tax deductible, meaning you reduce your taxable income in the year that you contribute. Meaning that if I make $50,000 in a year and I put $5,000 of that into my traditional IRA, traditional 401k, traditional whatever, that $5,000 I put in is deducted out of my income before any taxes is paid on it. And the remaining $45,000, that is what I made at my job in the eyes of the IRS. So when it comes time to pay taxes at the end of that year, I made $45,000, not $50,000, because $5,000 went into my traditional account pre-tax. Now, that money is allowed to grow and grow and grow, and it does so tax deferred, which means any capital gains I have, any dividends that are being paid out, any interest I'm earning, all of that that's happening in a traditional IRA, 403b, whatever, you're not paying active tax as those things are happening. It's allowed to grow tax deferred, and you will pay taxes when you take the money out. So when you distribute the money out of the account, that's when you will pay taxes. So it can grow and grow and grow and make all kinds of money inside the account, but when you take the money out and you go to spend that money, that is where you are looking at taxes. And it's going to be income as if you made it at your job. Any money you take out of that traditional type of account will be income, and you will pay normal income taxes subject to income tax brackets. But what about a Roth? Let's talk about the Roth. And to do this, let's compare apples to apples. First and foremost, looking at the contribution. So money going into a Roth. When I put money into a Roth IRA, Roth 401k, Roth 403b, whatever, that money does not get the same tax benefit I got from the traditional account. So this means If I make the same $50,000 and I put the same $5,000 into a Roth account instead of a traditional account, I still made $50,000 in the eyes of the IRS. So I'm not going to get any sort of tax benefit for putting that money in there. That's not where the Roth gives its tax benefit. So where might it give its tax benefit, you're asking? With Roth IRAs, Roth 401ks, Roth whatevers. That money, just like the other account, grows tax deferred. So I didn't get the benefit at the beginning, but I am going to get that benefit of it growing without those taxing things happening. No capital gains, no dividends, no interest, no taxes on any of that while it's growing. Now with the Roth, when I go to take that money out, guess what? No taxes owed on that money. It is completely tax-free when I take that money out, no matter how much it has grown. Right? 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 So what does that mean for me, for you? What that means is that Roths can be extremely advantageous when they have a lot more time to do their thing. The more time the account would have to grow and not be distributed out and taken, that money can grow tax-free. So if it can go longer and longer, and we've talked about compounding interest the other day, yesterday on this channel. Was it yesterday? It was yesterday we talked about compounding interest. Compounding interest, exponential growth. The later years are pulling that weight and it's not even close. And if those later years can be happening in a Roth, that can be so significant. As always, if you are looking for personalized advice, please, please, please consult a financial professional and make sure they set you straight. And if you like this type of content, please smash the like button, leave a comment. If you really like the video, subscribe to the channel. And until next time, you guys, that is Finance AF.